Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines at this hour. The government reshuffles the bureaucracy. Atanu Chakraborty replaces Subhash Chandra Garg as the Economic Affairs Secretary. Garg is sent to the Power Ministry while Ajay Kumar Bhalla makes it to the Home Ministry. IDFC First Bank reports a loss of more than 600 crores after provisioning doubles in the first quarter. The bank cites two corporate accounts for making such a large provisioning. ICRA cites Yes Bank's increased stress on its loan book and weak capital position to downgrade the lender's long-term credit rating. Slowing sales may hurt Tata Motors in the first quarter, while all eyes will be on Bajaj Finance's asset quality number. Earnings come out later today. Well, let's take a look at the trade setup for the day. The world markets were a mixed bag if you look at the US markets, because tech did very well and therefore Nasdaq and S&P did very well. Dow couldn't do that. And again, earnings driven, largely earnings driven for the Nasdaq, 70 points in the green. And there's a very nice chart on the Bloomberg terminal which shows how the last few years, the entire uptick that has come into the S&P or the Nasdaq is largely earnings driven. It's dependent on the bottom line, and which is why we're seeing that dichotomy that while tech valuations may have come off because the earnings are getting delivered, Nasdaq the last few days has been outperforming by a margin to the Dow, and well, that at least keeps the sentiments in the US markets and the US investors going. Can't say the same for Asia because it's a mixed bag really. If you just look at across the Asian bourses, you will see a flat start to maybe even a bit of red as far as Shanghai goes. SGX Nifty 2 indicating a start, which is just about marginally in the green. But as we all know, these starts in the green don't really matter. We started off with very positive market breadth yesterday, somehow failed to stick on to that and came off. And today, well, you never know. We have a start which is around that 11,300, but we are below that level. And once that is opened up, if we stay lower, then that might lead to more increased selling as well. Because FIs are not in mood to really distinguish between the good and the bad right now. The only word that is happening, the only thing that is happening when the first 15 minutes go past is sell numbers coming in from the foreign institutional investors. Now, two data points out here. One, what the index has done from its peak and what different constituents have done. And two, the kind of flows that we're seeing out of the Indian markets. It's incessant and it's continuous. So you just look at the FI number the last few days. Okay, this is a very nice, interesting statistic that I have for you. From the peak, from the June 3rd high of the Nifty, the kind of fall that has happened in the index is not led by the weaker hands. It's HDFC Bank, Reliance, Axis, L&T, to an extent ITC, but the top four names are names that everybody wanted to buy. Those are the names where the FIs have large shareholding, and that is where the selling has come in. Conversely, if you look at what stood out and held out, a lot of names that you wouldn't have thought would do that. Power Grid, Sun Pharma, Infosys, you can argue yes, but it's beaten now all the other IT companies by a margin. And this, well, it's interesting that what Infosys has done while the other IT companies couldn't. And HDFC, the bellwether, has helped hold out. But those gains negated by what HDFC Bank has done. So it's very interesting what's happened from the peak levels for the Nifty in terms of gainers and losers. The FI-owned favorite stocks have come off. The defensives have largely stayed, and this is the reason, frankly, the FI selling every single day now. We're used to a large sell number coming in from FIs. The DIs may be negating that, but that doesn't mean anything really. The force of the FI selling in the FI dominated stocks is so much that the Nifty tends to correct. We might see that happen today's session as well. You never know, shouldn't be surprised really. But while we'll wait for all the Nifty numbers to come out and a lot of broader market numbers which are interesting, I think the key thing to monitor is the stocks that will react today, because a bunch of them could react today. Firstly, Bharti Infratel, mixed numbers. They were aided by the Ind AS 116 adoption and one-offs during the quarter. So a lot of one-offs, and we'll talk about that. Somit will come in and speak about that, so I won't dwell too much on it. But I thought that most people would now go out and say that because there were some positives, the valuations look attractive, and that was Bank of America Merrill Lynch's main context, that the valuations are attractive at these levels for Bharti Infratel. Let's see if it tends to react positively today. ICICI Pru Life Insurance, one more private life insurer, which has delivered a strong quarter. A ramp up of protection business has driven the margin expansion. Almost everything is doing well. Yesterday there was some profit booking in HDFC Life, but that notwithstanding, strong quarter, strong move there. ICICI Prudential too could expect a decent move in the session today. I'm watching out for Shriram Transport Finance because contrary to what most people would have thought, the numbers are in line with estimates. The asset quality is not as bad as feared, and because of the shorts in the system, I dare say you might actually see a short covering led bounce on open. I don't know if there is a rally during the day, but on open you might well see some bit of short covering led bounce in the first half an hour of trade. Do watch out for Shriram Transport Finance. Quest Corp, again, interesting name because it's been in news of late. The revenues are in line with estimates, but the operating beat is there. I think the most important number from Quest Corp's perspective is the EBITDA margin. They're scaling it up from 5.2% to 6.1%. They've slowly and surely graduated these EBITDA margin numbers higher. That should please the street. Let's wait and watch if it reacts positively. What should react negatively is Oberoi Realty. The results are well and truly below estimates. Revenues down 32%, net profit down 50%, margins at 39% versus 52%. Finance costs impacting profits big time. The stock should react negatively maybe. And IDFC Bank too should react negatively. It's the third consecutive quarterly loss, driven by high provisions, naturally so. And I think the note from Morgan Stanley in that one line sums it up, that the asset quality pressures continue to overshadow any business positives that are coming in for IDFC First Bank. Long touted as a stock that you can buy from a 5-year perspective. Somehow, it's not able to meet expectations. So, well, we'll talk about IDFC First Bank and some others later on in the show. Let's tell you what's lined up on First Word today. We'll start off, as I was saying, with Bharti Infratel. It reported an increase in tenancies for the first time in 7 quarters. Sumit Sarkar will tell us what else is aiding the numbers. JLR may continue to drag Tata Motors earnings. Yatin will tell us why losses are expected to widen. And Bajaj Finance is expected to report strong growth once again. Shefali Malik brings us the expectations. Lastly, Sajid Mangat will tell us all about the bureaucratic reshuffle at the central government. Bharti Infratel reported a surprise growth in its top line thanks to an increase in the number of tenants on its towers for the first time in 7 quarters. But the reported numbers were inflated by one-offs and the shift to new accounting standards. Sumit Sarkar is standing by with the fine print. Sumit, good morning.
Good morning, Raj. So as you mentioned that there were a lot of one-offs and the Ind AS impact that had inflated the Bharti Infratel Q1 numbers. So I'll give you the headline numbers first and then I'll explain you what were the one-offs and the Ind AS adjustments that were there in the first quarter of financial year 2020. Now if you see the company's number compared to last quarter, the revenues were higher by nearly 3% to close to 3,700 crore rupees. The EBITDA bumped up by nearly 27% to close to 1,900 crore rupees. Margins came in higher at 51.1%, while the net profit was higher by nearly 46% to close to 887 crore rupees. But as I mentioned, this were because of the Ind AS adoption, Ind AS 116 adoption, and because of some one-offs during the quarter. So I'll start off with the one-offs that were there in the first quarter. So the first one-off was the company had reversed back some of the earlier booked expenses worth nearly 125 crore rupees in the first quarter, which aided the company's EBITDA and the net profit in this quarter. Now along with that, the company has also reversed a rent expense which was earlier booked as an expense in the earlier quarters worth nearly 15 crore rupees, and now they have booked this amount as an other income in the first quarter. So this has aided the company's net profit and not the EBITDA. Lastly, the company has also received a tax credit, has made an adjustment of tax credit worth nearly 175 crore rupees, thereby again aiding its net profit number in the first quarter. Now how did Ind AS 116 impact the first quarter numbers? Firstly, the company's revenue were higher by nearly 82 crore rupees because of adoption of this Ind AS 116. Their EBITDA was higher by nearly 396 crore rupees, while the net profit was higher by nearly 44 crore rupees. So as you can see the chart that we are showing currently, we are showing the reported Q1 numbers and the adjusted numbers. As you can see, the adjusted revenue of the company of after adjusting the Ind AS adjustment would have been close to 3,600 crore rupees. The EBITDA number after adjusting the one-offs and the Ind AS adjustment would have been lower at close to 1,375 crore rupees, and the margins would have been at 37.9%, while the net profit would have come in at around 528 crore rupees. So these adjusted numbers are below the analyst estimates, but the reported numbers are ahead because of the Ind AS adjustments and because of this one-offs. So that were the negative parts which aided the company. These were the negatives that I've just mentioned, because of which the EBITDA EBITDA and the net profit are below of what the analysts were expecting from Bharti Infratel. But there were some positives in the quarter also. Now, in the first quarter, if you see, the company added nearly 523 tenancies in as against a decline that the analysts were expecting. Now, this is the first addition in tenancies seen by Bharti Infratel in the last 7 quarters. The tenancy ratio remained stable at 1.87 times. And the second key positive was that the tower rentals rose nearly 7% to close to 42,600 crore rupees, which again shows the pricing power that Bharti Infratel has in the tower business. Now, another positive that was there in this quarter, couple of other positives that were there in this quarter was there was a finance cost of around 112 crore rupees as against a finance income of nearly 24 crore rupees, which also impacted the company's net profit, and that's the reason the net profit, adjusted net profit, has fallen this much for the company. Along with this, in the fourth quarter of financial year 2019, the company had received exit penalties worth 100 crore rupees, which had come down directly on its net profit. So this was not this amount was not there in the first quarter numbers, which also impacted the net profit numbers. Now, the energy business, if you see, due to lower energy cost, the spreads increased to 5.4%, but this was expected by the analyst also. And if you see, the full impact of this tenancy cancellation is yet to come in the books of Bharti Infratel, because they mentioned that close to 3,566 tenants have served exit notices but continue to remain on the network, which means that they have been paying Bharti Infratel, but this full impact of this exits will come in the following quarters for Bharti Infratel. Lastly, for the merger with Indus Towers, the company has said that they are still waiting the FDI approval, and post this approval comes in, the merger with Indus Towers will be completed for Bharti Infratel.
So the question largely is, Sumit, do the positives, which are a few, outweigh the Ind AS adjusted numbers?
Well, it is actually difficult to say, because the Ind AS adjustments will be a fact now, because the company will have to report on the basis of Ind AS adjustments. But there were also one-offs worth nearly 140 crore rupees, which bumped the company's net profit. So after removing that, these numbers were below what analysts were expecting. And actually, it's not only below; it's way below what analysts were expecting. Analysts were expecting a margins of close to 40-41%, but the actual adjusted margins for the company is 38%. But these positives of tenancy addition is a key positive that has come in for Bharti Infratel, because if you see, for the last 6 quarters, the company has been losing quite a lot tenancy because of Vodafone Idea cancellation and because of the consolidation that we have seen in the telecom industry. So this tenancy addition does a positive for the company, and the tower rental increase is also a big positive coming in for the company. So actually, your numbers were mixed set, so it's very difficult to say whether the positives will outweigh the negatives or not in this quarter.
Maybe you can argue that the valuations are at levels from where the downsides might be contained if the number is not a big negative, and since there are some positives.
Well, yes, actually, if the tower rentals continue to remain stable or continue to rise, and if there is tenancy addition, then obviously it is very positive for Bharti Infratel.
Okay, let's wait and watch. We'll get to know at 9 a.m. as to what happens to the stock. But just remember, it's gotten beaten down quite a bit. Maybe we'll not see too much of a negative reaction. In fact, we might see some positivity too. Let's wait and watch. Sumit, thanks so much for putting that into perspective. That's Bharti Infratel for you. Came out with the numbers. Now to 2 companies which will come out with numbers. JLR continues to be Tata Motors' Achilles heel. Its falling sales and weaker pricing power may cause Tata Motors' losses to widen in the June quarter. Yatin Mota is here with what the street is pricing in. Yatin, what can we expect? Yet another quarter of some one-offs which will drag down the numbers, or not quite?
Good morning, Neeraj. First of all, if you look at one-offs, obviously foreign exchange losses and interest costs are something that we'll be watching out for. But if you look at the consolidated earnings for Tata Motors, we are expecting a 15% kind of a decline as far as top line is concerned. This time, the consolidated entity is likely to post a number of close to 57,800 crores in terms of revenues. That will be, 13 to 15% kind of a decline. EBITDA is also seen falling by nearly 20% to come in at little over 4,000 crores on absolute basis. And if you look at the losses this time, losses could be close to 2,000 crores versus a loss figure of 1,900 crores same period last year. More importantly, this time various brokerages are pegging the foreign exchange losses to be at close to 100 million British pounds, which is close to 900 crores odd. Probably, that is the reason why we are looking at some pressure on the overall, profitability. Margins also seen declining to a level of 7% this time, which is probably slightly lower than what it used to do as a run rate in the past few quarters. In the factors, key things to watch out for, the 2 big numbers that we'll be watching out for is the standalone margin performance. The margins there are seen at 3 to 4%. The volumes are down for the standalone entity, especially in the commercial vehicle side. And we are talking about the margins which are expected to be half of what they were last year, same period. So a 4% kind of a margin is something on the higher range is what brokerages are talking about as per the Bloomberg Quint poll. JLR margins also seen at 5.2% versus a level of 6.2% on a year-on-year basis. These are, a conservative, margins that brokerages are pegging at this point in time for JLR on the back of weaker product mix as well as lower selling prices. Remember, this time JLR entity has posted a 5% decline in their overall volumes ex the China JV. So let's see how really does the number shape up there. And of course, the key issues to watch out for in the Tata Motors numbers is the management commentary really on the Chinese markets as well as on the European market as to how really is demand shaping up. Of course, there are various hangovers there. The diesel car issue in Europe still continues to plague the auto sales. In China, the trade war clearly is impacting sentiments. These are the few things we need to watch out for as far as the management commentary is concerned.
Okay, that one number that you would watch out for, Yatin, today? That could make or break the stock?
That's obviously GLR margins. A lot of adjustments again there. So we need to see the clean number for the GLR entity. 5.2% is what our poll is throwing up. But the range is quite varied. Brokerages from Nomura to Motilal Oswal expect a range of 4.5% margin to 7% margin. So the range is big. The consensus is close to 5.2, 5.5%. So let's see how really does Tata Motors really stick to those EBIT margins and EBITDA margins guidance. They have been talking about EBIT margin in the range of 3 to 4%. They told us last time when we spoke to them that the margins could improve from the last time's levels which were slightly under pressure. So let's see, in a circumstance where things are challenging, especially for dealerships, how does the company really manage its EBIT levels?
Okay, Yatin, thanks so much for putting that into perspective. From the big boy in autos to the big boy in consumer finance, Bajaj Finance may continue to be unscathed by the liquidity crunch in the financial sector. It's expected to report a strong growth once again. Will the numbers reflect some asset quality concerns around the retail book? Shefali Malik is standing by with what we are watching out for. Shefali, good morning.
Good morning. So first, to start with the basic numbers, the net interest income at a standalone level, that's expected to go up by about 25%, and profit is expected to see a jump of about 40% on a YOY basis. Now, they already gave an update of their Q1 following the remarks by Mr. Sanjeev Bajaj, which he later on clarified that the slowdown is systemic and not really specific to his company. So that time they gave an update that AUMs have grown by about 41% on a YOY basis, and the new loans booked during the quarter stood at about 7.3 million versus 5.6 again on a YOY basis. They acquired 2.5 million new customers as well during the first quarter. So the company already gave an intimation that they have not been affected by this entire liquidity crisis and the slowdown that we have been witnessing, and their business has continued to be robust in the first quarter. So what can we watch out for in the earnings? It's certainly the asset quality in various segments. In the consumer lending segment, in the SME segment, rural, we've seen some stress for some other financial entities, and in the mortgage business. So last time as well, they had grown about 10% on a sequential basis. So that is one segment that is being keenly watched out for, which is basically the loan against property segment. So what kind of business momentum continues for them in that particular segment and overall as well, and going forward as well, what will be watched out for will be the asset quality. If not in this quarter, then maybe in the quarters to come.
Yeah, they had in a couple of past quarters, Shefali, they have shown some issues in one or two books, right? I think the vehicle financing book in Q4, if I'm not wrong, had one or two chinks. So I think where the others are talking about some stress is where we will watch out for commentary from Rajiv Jain as well.
Yes, absolutely, because at the end of the day, they're a part of the system only, right? So maybe they may not be affected very badly in this quarter, but yes, we will certainly watch out for the impact and the commentary that, how they might do in the quarters to come.
Okay. And, I think we'll try and tie that in. We'll be speaking to V. Vaidyanathan of IDFC First Bank, and while we'll talk to him about IDFC books, the capital first book that comes in, consumer financing, in a way modeling Bajaj Finance, I think it'll be a very important conversation as well. Maybe some trends of some kind of pain that capital first, the erstwhile capital first might be facing. We'll have to see if Bajaj Finance does that too or no. Thanks, Shefali. Thanks so much for putting that into perspective. No way I'm trying to say that Bajaj Finance will follow Capital First or IDFC First books, but they're in the same space and therefore it'll be interesting to see. So we'll get to know today as to how is the consumer financing book, larger books in India are shaping up. So those are the key numbers that you need to watch out for. We'll talk about a whole host of others. I mean, the companies that have come out with numbers thus far a bit later on in the show. But the last piece on First Word today is on the bureaucratic reshuffle in the national capital. The finance ministry will see two changes, with the DIPAM secretary being given the economic affairs position and the finance secretary being moved to the power ministry. Sajid Bangat's here to fill us in on the changes.
Interesting
and pretty soon.
Yeah, and these they're two gentlemen who were face of the standoff between Reserve Bank of India and the Finance Ministry. In Reserve Bank of India, it was Viral Acharya who stepped down a few days back, and in Finance Ministry it was Garg who was the face of the thing. Both of them Viral was defending the reserves, and he wanted more money from the RBI. This attempt, it seems to be a de-escalation from the government, saying that okay, let's de-escalate it, it's not going to happen. The committee has come out and committee has given them pittance in as many amount. The amount they wanted was 30,000-40,000 crores. They're not even getting close to that. So there is a de-escalation of that happening. We are in a slowdown. We don't want that to happen. Let RBI do its function. And I think that's where I think if you look at it, Shaktikanta Das' influence also may have come in. It's assumed that because he has a backing of Prime Minister's office, he would have said that please de-escalate. If you want to go to the market for $10 billion bond, sovereign bond in October, you need to de-escalate it and focus on the economy rather than this petty fight about reserves, book entry reserves coming into the finance ministry. And that's exactly what it seems this entire thing is about. Garg was part of the committee. Committee couldn't give what he wanted. He was a dissenter, or he's a lone person who objected to the entire recommendations. He even sought PMO's intervention, that didn't come through, and finally the committee has completed his report. Now what is happening is that he's been moved out from there to Power Ministry. It's also an important ministry where a lot of stress assets are there, so he will have to look at it. But the important thing is Atanu has moved from divestment or DIPAM to DEA. That gives a good indication about, because Atanu was responsible for getting the targets of divestment. Remember, last year he got nearly a lakh crore in divestment, whether it is through ETFs or through sale of assets, everything. And this year that's emboldened the government to again go for a 1 lakh crore divestment target, which is coming in. It also means that he has a ear to the market as well, because and that would be very useful when he will be DEA and going out in October with a sovereign bond issue to all the foreign investors. So it plays out in that sense, the entire dynamics of saying that okay, we need to prepare for that part of it. Yesterday Bloomberg said that it would be a one-shot $10 billion tranche which the government is going for, and that would need a lot of support from there, especially at a time when you have policies or tax policies which are going against the foreign portfolio investors. So they are building up their team who is going to face, because they don't want to see a team going and saying that okay, I want to raise $10 billion, and at the same time you are trying to destabilize the economy, or maybe attack the reserves of the Reserve Bank of India. The same person.
Sure. Okay.
So it's a phase which they want to change, and they want to bring in a phase which is more like an investor-friendly phase rather than someone who's not investor-friendly. That's one of the big takeaways from this, because it's exactly a de-escalation escalation exercise
that,
move by the government, and a very legitimate move there. Others are very important as well. You have Ajay Kumar Bhalla, who has moved out of power and gone to Home Ministry. That's a promotion for him there. And on the other hand, you have some major changes in DIPP. Ramesh Abhishek is retiring at the end of the month, and you're going to have Guru Prasad Mohapatra coming in there. That's also an important move which is there. DIPP also forms a very important part in the FDI flows, and as far as your startup engagement which has been there. So these few things are important from that point of view. But the bigger thing is the finance ministry one. They want to take off the phase of which was there and bring in a new phase, so that you start with a fresh slate.
Yeah, especially at the back of what's going to happen in October, the debut $10 billion offering. Yeah, that is up. That will be up in a couple of months from now.
Yeah, okay. and you need to have that a phase saying that, okay, you have a Deepam guy coming in as a DEA who has background of meeting investors and listening to the investors, and that guy will have a much better, it's a much better bouncing board for a $10 billion sovereign bond issuance, and government wants to ensure that they want to go through with it in one shot.
Yep, let's wait and watch. Sajid, thanks so much for filling us in on the importance of these things. That a lot of times these nuances miss us, but important to have take stock of this as well. And as Sajid was saying, for a lot of you are wondering why are we referring to this 10 billion global bond sale. I would urge you to go onto the website and try and read that story that my producer was just putting up right now. This is the large issuance, the first issuance. It'll offer a spread of maybe 90 to 130 basis points over US treasuries as well. So in all probability will be lapped up, but it's a large one. 10 billion in one go has surprised a lot of people yesterday. Let's wait and watch how India progresses on this over the course of the next couple of months. Sajid, thanks so much for putting
just
that
to
in
give an example
Sure.
here on the 10 billion, it will get lapped up very quickly, because you see the CPSE ETF was for 8,500.
You're comparing
crores.
apples and oranges.
Yes, but see the demand that was there, right?
Sure.
And demand was there also for CPSE from a lot of foreign investors as well.
Well, that's true. And the spread that we are giving, or the India will be giving,
that will be attractive by itself.
By itself. Yeah. But still, I would still believe it's a large issuance, to be honest. But I take on board your point completely. In all,
I won't be surprised. It will be if it's oversubscribed by multiple times.
Okay. Well, let's wait and watch. We like those optics as well, right? Doesn't any nation. Anyways, Sajid, thanks so much for putting that into perspective. That's all that we have on First Word today. But lots more lined up on Indian Open. We discuss markets and macros with Harsha Upadhyay of Kotak Mahindra Asset Management. Important voice to have on a day like this. The government will create a 1 million-ton buffer stock for sugar this year. We talked to Abhinash Sharma of Indian Sugar Mills Association on that and more. And then decode the earnings of IDFC First Bank with V. Vedanathan and Mrityunjay Mohapatra of Syndicate Bank later on. But after this break, a full tilt towards the day's trade.